there's a bit of relief that we're seeing across Asian markets this morning. So after that carnage yesterday, would be interesting to see if there's any rebound in our markets. Arvind Sanger, Managing Partner at Geosphere Capital, is here to answer all these questions for you. Arvind, hi, good morning. First of all, what was the big reason for the correction that we saw in the Indian markets yesterday, and how would you approach it now?
Well, I think the Indian markets were probably held up better than many other markets. So there was a bit of a one-day catch-up sell-off, which was a little more severe, but not hugely more severe than what happened in other Asian markets. So, it was maybe 1.5% more than other Asian markets. But I think that primarily this is driven by some amount of global risk-off, and that global risk-off is being caused by a couple of factors, which I think you probably already had some discussions from previous guests, but, one concern is obviously the Greek election coming up and some concerns about Greek exit from the euro becoming, again, a point that is being discussed, and that could create some risks. And the other is obviously the U.S. Fed interest rate cycle turning towards, finally raising it, and tomorrow you're going to get the minutes of the last Fed meeting when they changed the language somewhat to patience from extended period. So there is some concern as to how quickly the Fed will start to withdraw liquidity. So those are, I think, two of the global risk factors, in addition to obviously the sharp meltdown in oil prices. And while oil prices lower may seem positive for importing countries, oil importing countries like India, but when it's happening in such a disorderly and sharp fashion, there's a concern that is also reflecting concerns about global economic outlook, and therefore, that is creating some risk off in global markets, and that's been another factor that's been, I think, the combination of these factors were behind the profit taking that we saw in India yesterday.
Hi, Arvind. Good morning. So on account of these three factors, Greece, as well as the disorderly fall in crude, as well as what's happening in Fed and when they'll hike rates, do you expect this global risk-off to continue? How much lower could the Indian markets go?
I guess, it somewhat depends on how badly global markets respond and how the news out of Europe plays out. Because, in Europe you have the Greece news. You also have the expectation that the ECB will do some form of quantitative easing in the near future. So if you get some disappointment, let's take the bear case, if you get some disappointment, the ECB does not deliver on QE in the short term and push it back to their March meeting, and at the same time you get fears that the Greek election is going to result in this opposition party, which is quite opposed to some of the clampdown on spending and some of the austerity measures, and then there's a concern of Greek exit, then you could have that plus some hawkish details coming out of the Fed last meeting minutes that come out tomorrow. If you get a combination of those factors, you could get another 5-7% pullback in Nifty quite easily, and therefore you could dip below 8,000, and I think that's one of the risk factors that we have to keep an eye on is global cues that could cause risk off. So that would be kind of my near-term expectation, and then if that develops further into where Greece does exit the euro and there's more disorder, you can paint a much more scary risk-off scenario, but that's certainly not where we are focused on right now, but we're cautious short-term because there's some uncertainties around.
In hindsight, Arvind, a global dip is generally the best buying opportunity for Indian investors. Would that be the case this time around as well?
I would expect so. I would want to be a little patient and not rush in too quickly, because the Greek elections are not till January 25th, and I think the commentary between now and then might remain somewhat uncertain. Therefore, tomorrow's Fed minutes, I'm not expecting any huge shockers. Clearly, the indication is that Fed is embarking on sometime in 2015 on a interest rate raising cycle, but I don't think there's going to be any big shockers there. But the Greek situation does create uncertainty, so I would say that I would be patient, and if the Nifty pulls below 8,000, I would be gradually stepping in and picking on stocks that I like on a long-term basis, because it looks like this government has finally started to move on several fronts, even if it's having to use a route which is not necessarily long-term sustainable without getting parliamentary approval. But the government seems to be focused, and hopefully we'll get more action out of this government over the next few weeks and months. And the economy itself is showing some data points that suggest that things are gradually turning, and all of the optimism is starting to translate into reality. So all of those factors suggest that any meaningful pullback in India would be, in our opinion, a buying opportunity, but at the same time we'd be somewhat patient in that.
Okay. Arvind, it seems hard, for the global markets to bottom while crude continues to tumble as well as the dollar continues to rise. What's the in-house view at, Geosphere about where crude might bottom as well as, on the dollar index?
Well, I would say that crude, which we spend a lot more time on than trying to call the dollar, and the two are not necessarily related. I think, on crude, we've been, frankly, even though we were somewhat bearish on crude in the fourth quarter last year, we've been surprised by the speed and the magnitude of the fall. At this point, it's almost impossible to say how much further it has to fall, although I think, we're getting relatively close to the point with another, if we're already at $51 on Brent, if we got another $5 or so on Brent, which would be put WTI in the low 40s, we would be at points where at least some of the producers might start to get to cash break even. So I think we've clearly overshot in terms of long-term fundamental value of crude, in terms of marginal cost of production. And we're probably even getting in the next, 10% move in crude prices towards where we would start to run into cash costs. So I think that we're not that far from the bottom. I would say that I would be shocked, to be perfectly honest, if crude oil went, if Brent went into the 30s, so it could get into the 40s. We're already at 51. It can go down another $5, $6 easily. But I think we're in the last legs of the sell-off. But the one concern is that demand seasonally slows down starting in March, and therefore, does crude bottom before that, or does crude bottom at that period? So I think we're in the last couple of months from a time period, and in the last 10 to 15% in terms of magnitude of the crude pullback. And I think the biggest part of the pullback is behind us, but that doesn't mean that we couldn't have some more down days, and therefore that will remain one of the risk factors. But I think at this point, crude is not going to be the major headwind. Dollar is clearly a headwind. And a bigger headwind, because I think that is reflective of risk off, and that is reflective of people taking money out of other parts of the world, particularly Europe is notable, and that hurts emerging markets too. So that's another risk off factor. But I think that this volatility is going to be around with us over the next few months as we move towards a U.S. rate increase on the horizon. So I think that volatility Indian investors are going to have to deal with, but hopefully the Indian government in the meantime and the Indian economy in the meantime are doing enough to cause India to be one of the less affected by this volatility.
We hope it stays like that, Arvind. Just one final question from our end then. A commentator just a while back was stating that the US markets are in a very mature stage of the bull market, and there could be a limited upside from here on for the US equities. What is the sense you're getting about what stage of the bull market India is in right now?
Well, I would say that, India is barely started its economic recovery in terms of earnings from the trough of the GDP growth and the earnings growth that we saw a couple of quarters ago. So I would say India is still in its early stages. Obviously, the stocks had a great run in 2014, so there's always room for pullbacks here. But I think in terms of India, India's medium to long-term story, we're still in the very early stages.
All right, Arvind, we'll leave it at that. Thanks so much, for joining us early in the morning. So there are global concerns, what's happening in Greece, crude, but as history points out, it turns out to be a good buying opportunity.